So today we're diving into one of the most fascinating rivalries in the automotive industry right now, which is BYD from China versus Tesla from the US. I want to be breaking down exactly how those two giants stack up in 2025, where they're headed, and which one might be the better investment right now. And lastly, of course, give you my personal thoughts on it and also show you where you can buy BYD if you're interested in it. But first up, let's jump over to Seeking Alpha, where we can see over here BYD company and their share price development. And well, what can I say? Year to date, they're up 42%, which is really incredible considering all the recent tariff dramas we had going on. They're still very much in the plus. Unlike most of my stock holdings, which most of them are based in the US, well, here we have a Chinese company doing extremely well. And despite all, really outperforming, S&P 500 and many other indices around the world over a 5-year period, up 778%. Really and truly outstanding. If I compare it to the S&P 500, you will see if I go down over here to total returns, because I should consider total returns as they are paying a dividend. We'll come to this in a second, which is lower than many other companies, but still nice. And in fact, Tesla does not pay a dividend. So that's yet another attractive point that BYD has going for it. So if I compare total returns to the S&P 500, you see here the S&P returned around 109%, while BYD returned close to 800%. So absolutely phenomenal returns. Now let's factor in Tesla in this equation to see how that squared up to them. And you will see, well, over a 5-year period, Tesla actually returned only around half that of BYD. If you see it over a 10-year period, it definitely outperformed. Even over a 1-year period, it did the best out of all of them. So definitely interesting when you look at those share price. And that's actually what triggered me to really look into this company and see whether right now is a good period to buy. Now, if you compare also price per earnings, which is a popular metrics to kind of indicate whether a company is overvalued or undervalued. So the PE ratio, often referred to, is currently 18 at BYD, which is really very low. Because prepare yourself, for Tesla, we are currently looking at a 100 PE ratio. And you can also see over here that BYD is actually paying a dividend. Yes, it's fairly small at 1.13%. It's around the same as the S&P 500. So you're not going to become rich by investing in that through the dividends, but it's a nice added bonus that people appreciate, especially in difficult times we're in right now. Seeing that coming in is definitely great. You can see over here, they have been paying and growing the dividend for the last 2 years. And a very nice, healthy growth rate as well, right? So it's not just paying, but it's also increasing it time after time. And you can see here the historic dividend payouts. Now, just coming back to Tesla once again, actually, let's look at their share price, how it developed. And well, obviously, they have taken a massive beating since the beginning of the year. Basically, since President Trump came into power, and his right and left-hand man, who also happens to be the founder of Tesla, Elon Musk, well, he really struggled with his company because unfortunately, his political ambitions really got in the way. And a lot of people got salty about this. Now, on top of it, we have the tariffs, which also will hurt, obviously, Tesla. But of course, also a lot of people are turning away from Tesla because he also made some really weird statements in the past. And obviously, Tesla almost becomes in a way controversial. A lot of Tesla owners who used to own cars are now selling them. So while early on, Tesla really had that coolness factor, I think now it almost becomes like a political statement if you drive a Tesla, which is really not helping them, right? For better or for worse. But a lot of people kind of don't want to be associated with Elon Musk anymore by buying a Tesla, even though they might like the car. And obviously, for the short term at least, it does reflect on the share price. Now, over a 1-year period, you would still be up if you held through all these difficult times, but definitely way less than BYD performed over the time. And of course, also something always interesting is the short interest, 2.38%, more on the higher side. Now, it's not outrageous, but it just means that a lot of people are betting for the share prices to keep on falling. That way they would make their money. So the higher that number is, the more risky in my eyes is an investment into such companies. The question is, who's going to win going forward? And it seems with Trump's tariffs imposed, especially on China, right, where BYD is from, it might have actually given the edge to BYD compared to Tesla. And while we don't have the latest data of car sales that came out now after the tariffs, we should be seeing this very soon. Let's have a look at the total revenues and see how the two compare. So we have here the two lines. The orange one is BYD and the blue one is Tesla. Let me zoom out a little bit here so you can see it better. Tesla was leading the pack and edging out BYD in terms of total revenue. That was until 2024 when BYD actually outsold Tesla in terms of total revenues. But the difference becomes even bigger if I switch to quarterly. And you see here the last quarter of last year, you can see that ramping up even more. So while on an annual basis, it doesn't look that bad, on a quarter by quarter basis, it is really massive. You can see the last quarter of 2024, a major difference in terms of sales and revenue for BYD. And honestly speaking, I think that just sets the tone for 2025 and other years to come. Because I don't know about you, I'm living right now in the UAE, but summers we spend in Europe. But here in the UAE, I mean, I've seen so many BYD cars, which I haven't seen in Europe previously. But I'm pretty sure if I come back now to Europe, you're going to be seeing more and more. Because first off, people are leaving Tesla, as I said before, because of the political statements and so forth, but they still want to be driving an EV car, right? It's environmentally friendly. So, well, where do they go to? You have some of these legacy car manufacturers like BMW, Volkswagen, Mercedes. They're trying their best and, they're getting better at EV cars. But when you look at the value that you get for the money, and especially the money, how much you pay, in the times we're in right now, with high inflation, you really look at every euro, dollar, pound you spend twice, right? So you really want to maximize your gains from it. Now, obviously, I'm not talking about high-end luxury cars, right? That's a whole separate categories. Those with, endless budget, they will always go for a luxury car. But I'm talking about, middle class, entry category of cars. You really want to get good bang for your buck. And I think that's where BYD really shines, because they're going to be penetrating the market with really aggressive low prices. And frankly speaking, I mean, looking at some of their cars, I haven't driven one myself. I actually really like some of them much more than the Tesla one. I think they look much sleeker, much nicer, and the interior inside, these leather seats and so forth, actually look more premium than Tesla, I would say, right? So in the beginning, I was personally quite attracted to Tesla because they were really cutting edge and leading the way, and they were the first EVs coming out and so forth, but they're really catching up. And I think in many ways even outshined them. And apparently they now came out with some kind of superchargers and new batteries that can charge those batteries, the car batteries, in 5 minutes to reach 250 miles in terms of distance for the car, which will be absolutely amazing. And I think that will really be a game changer for higher adoption of more and more people, because I think range anxiety still exists in a lot of EV buyers. Plus, let's be honest, usually EV cars don't really hold their value too well. So why would you spend premium on a car that loses huge value, right? So if you buy a Tesla, you resell in 2-3 years, it loses a lot of value. So might as well just go for a budget car that is already priced really cheaply, because in terms of value depreciation, it won't hit you that badly. And despite the aggressive pricing, because they're really trying to undercut all the big players, well, their profitability is actually really very good. You can see here an A+ rating from Seeking Alpha. And of course, those margins are less than some tech companies, right? Tech companies, you have margins of 70, 80, even 90%. So naturally, car companies have a lower margin, but still 19% is actually not too bad. And return on equity at 23 is also really quite healthy. So I think that's really, really nice. So looking at all these numbers and the story around BYD, I mean, honestly, once again, well done to one of the greatest investors in the world, Mr. Warren Buffett, who actually invested early on into BYD. Back in September 2008, Berkshire Hathaway, his holding company, bought 225 million shares of BYD back then for around 230 million. So basically, he bought it for $1 a share. And well, you can see what the price per share is right now. So he got a really healthy return on that. But let's also talk about exactly what BYD is doing differently than Tesla. BYD's strategy is built on 4 pillars. Number 1 is the vertical integration. BYD manufactures around 75% of all the components in-house, and that includes batteries, semiconductors, and motors, which gives them a huge edge and control over the entire supply chain and costs, of course. Secondly is the proprietary Blade battery, which prioritizes safety, cost efficiency, and longevity over higher energy density than Tesla, and that's why they can also have more reach and of course these super ultra fast charging batteries. Thirdly is the product diversity. So while Tesla focuses mostly on premium only strategy until recently, since they started cutting costs, BYD offered a full spectrum of different vehicles, all the way from budget options to luxury cars. And the fourth point is that BYD vehicles are significantly cheaper than comparable Teslas or any other manufacturers. And guess what? That makes a difference when it comes to purchasing decision making. Tesla, meanwhile, has taken a little different path, because Tesla is betting really big on autonomous driving and AI as its key differentiator. And despite the recent price cuts, Tesla kind of positioned itself as a more premium brand with higher margins. They also have Tesla's strong charging infrastructure, which remains a significant advantage, even though now they are opening it up to other manufacturers. And of course, Tesla's brand is more globally recognized and carries stronger emotional appeal, especially in Western markets. However, as I mentioned at the beginning of the video, that is about to change actually right now. Now, looking ahead at the trajectory of those two companies will likely continue to diverge over time. BYD appears positioned for continuous volume leadership. They're rapidly expanding their manufacturing globally, with plants in Thailand, Brazil, Turkey, and even more countries on the horizon. And of course, their cost advantages should also allow them to maintain that competitive pricing, even with the tariffs in place. And looking at the technology roadmap, it is really impressive. I mean, BYD is rolling out their super e-platform with megawatt charging capabilities and standardizing their God's eye, as they call it. And they're also continuing to innovate battery technology where they already have a significant lead. Now, Tesla's future, on the other hand, hinges more critically on achieving breakthroughs in autonomy and AI. If Tesla can deliver on the promise of fully autonomous driving and robotaxis, it can really unlock an entirely new business model with potentially enormous margins, right? However, this is a higher risk and higher reward proposition. When I look at those companies, the market cap disparity is really incredible. Despite BYD outselling Tesla in terms of total revenues, Tesla's market capitalization is still substantially higher. Look at this, $817 billion. And that's really a major premium compared to BYD's market cap of only $148 billion, which is still high, right? But only a fraction of Tesla's. So you can see BYD trades much lower multiples than Tesla, making it potentially more attractive from a pure valuation standpoint. So what's my take on this all? Well, if I had to choose between any of the two companies right now, I would definitely be going with BYD. The company has built an incredible solid foundation with vertical integration, cost leadership, and expanding their footprint globally, manufacturing really cool cars that people really seem to enjoy driving. Now, when you compare what you're getting versus what you're paying in terms of market cap, BYD really seems to be the clear choice in my eyes, especially also looking at the years ahead and their growth potential. Moreover, looking at Tesla being all centered around Elon Musk, for me, is just too volatile. Being dependent on one person and his tweets is not just something I would want to be investing my hard-earned money into. That said, however, I'm not personally looking to invest into China right now. This is just a personal decision based on my investment strategy and not a reflection on BYD itself. If I was to invest in China, BYD would definitely be one of the companies I would pick. And of course, nothing in this video is investing advice. I'm just sharing with you my thoughts, my opinion. Ultimately, this is your money, your decisions. And if you would be interested in buying BYD, I looked around different stockbrokers. Not all of them seem to be offering them. One of the few that I found was actually on eToro. You can actually buy it right now in Hong Kong dollars. So it's very easy to buy it through eToro. You just go on there, type it up. You'll find it over here. The stock ticker is called 01211.hk. They don't actually have, letters for the stocks like we have, for Tesla and so forth. They actually give it numbers. So it's listed in Hong Kong. You can buy it right there. And it's very easy to do via eToro. So what do you think? Are you team BYD or team Tesla? Or do you see any other competitor taking the crown in the near future? Let me know in the comments down below. Happy to hear from you. And if you enjoyed the video, please give it a like, subscribe to the channel so you won't miss out any future videos. Next up, check out this video over here. As always, stay healthy, get wealthy, and I'll see you in the next one. Ciao.